Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Thursday, March 25th, 2021. And here are our top stories. CEO compensation tied to ESG factors, and to judge ESG investment quality, look beyond the labels. Joining me now to discuss this and a lot more, Bob Colley is the principal and founder of Colley ESG. Bob, great to see you again this morning. Welcome back. Thanks for joining us today.
It's great to be back. Good to see you again.
Yeah. And I should say it's really afternoon where you are, but it's morning here in the States. We'll have to do a BRN AM Britain version or UK version. Bob, let's talk about CEO pay this week, because I think some really interesting developments in our friends up to the north of the US, Canada, where they're tying CEO pay to ESG. This is kind of a new development, an intriguing development. What do you have to say about that?
Well, I think it's one of the signs of just how big a trend this is. Because obviously, if you want to create actual change, there's a number of ways that you can do that. But one of the biggest ways to actually make a difference is to affect how people are rewarded and what they're paid for. So certainly not the only reason that corporations ought to be more responsible and ought to take their ESG responsibilities more seriously. But definitely if you're serious about it and you want to see a change of behavior, then what better way to do it than to actually tie pay to it? That's not the only incentive, but it's a big incentive for people.
And we're seeing a lot, just in traditional asset management, we see a lot of what are called activist investors. They can be hedge funds, people who have, large pools of money that they try to influence board decisions. And I kind of liken this very similar to that. Could we see what's happening in Canada, which obviously is I think it's in line with what we're seeing in terms of the fund flow. Could we see this applied to places like here in the States, places like the UK, Europe, China, other places?
I think so. I mean, everywhere there are slight differences in the emphasis and the expectations in different places, and differences in the law as well, and in the role of shareholders and the balance between your shareholder emphasis versus your other stakeholder emphasis and so on. So you're not necessarily going to see things identical from country to country, but the trends by and large are global trends, expectations that investors have, that society has. They're global expectations as well. So certainly I think we can look to what's happening in Canada, look to what's happening in other parts of the world, and you can certainly say that that's a predictor of things that can happen here as well.
Bob, any risk in terms of the balance? So ESG, sustainability, very hot topic. It has been for several years. Fund flows increasing. Obviously, this is top of mind. Carbon footprint. I mean, I can throw out a zillion buzzwords talking to you. You know them already. But is it a balancing act? Because if a board decides that it's going to hold the compensation of a CEO to a certain percentage based on a factor, and you can do other factors. You could have something tied to customer service or deal flow, for example, revenues, things like that. But is there a juxtaposition with the balancing act that you have to have with running a viable business? I'm not saying ESG is not viable, but running a viable business, been overweighting towards a particular factor.
Yeah, that's definitely a risk, and we've actually seen examples of that in some parts of the world where and I'm thinking particularly of Danone, which was very forward-thinking in terms of the responsibility it was taking. And in the end, it was activist investors who stepped in and said, actually, we think that this is hurting profits. We think that you've gone too far. And they stepped in to remove the chairman, which certainly raised a lot of eyebrows, and a lot of people didn't like that change. So in that case, there was definitely pressure between the people that thought they were on the right path and were doing terrific things, and that particular group of activist shareholders that said that it was, in their view, harming profits. And certainly from a short-term perspective, they thought that they could do a lot better by making changes. So you're always going to have that tension between the different parts. And yeah, to some extent, tension's okay and normal. We are trying to find a balance. Everything in life is finding a balance between things. So that's just going to be a factor. As you get an action, you get a reaction, and that's what happens.
And Bob, what about for the institutional investor? You're in a lot of those meetings guiding clients. You spent your career doing that, guiding clients. How do you break down, when you're talking about a particular fund, let's just say an example, fund XYZ that is socially responsible, it meets all the clients, checks all the marks, et cetera, but there are companies held within the portfolio. How do you cover that in a meeting? Because typically these pension meetings, endowment meetings, foundation meetings are not just about ESG. They may be about overall fund performance. So I guess the question is, how do you broach this conversation? Is it a separate meeting? Is it a larger part of the conversation that you have?
It is becoming part of the normal conversation now. This is one of the big interesting differences, I think, between the investment industry today, or what the investment industry is becoming today, and what it was 5 years ago. If you go back a few years, these conversations might have happened, but they would have been separate meetings. It would have been maybe a separate team, and it would have been handled almost off to the side of the quote unquote mainstream investment process. But the way that things are developing now, I think investors and investment firms would see these things that we think of as perhaps not directly financial, but the ESG factors as relevant. I mean, you don't understand a company if you don't understand some of its factors if you don't understand how it's managing carbon footprint, if you don't understand how it's managing diversity and how it's managing the workforce and so on. And so these now are being seen as part of the investment process, understanding how companies deal with a much wider range of issues than just how much profit we're going to be making next quarter. And as you suggested, it's possible to go too far and take your eye off the question of profits as well, and there'll be a reaction if you do that. But certainly that center of gravity of how investors are assessing investment managers has moved to be much more all-encompassing today.
Yeah. Well, Bob, I want to take a very quick break. When we come back, we'll talk about how do you judge ESG investment quality? Well, the key is you look at the labels, but can you? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Bob Colley of Colley ESG. Bob, thanks so much for staying with us this morning.
It's a pleasure.
So, we've been looking at nutritional labels and we've seen enhancements as to what the ingredients are in many of the major foods we eat. And here in the States and presumably in the UK, we've got the FDA here giving us the breakdown of carbohydrates, fats, proteins, etc., to make sure that we know what we're consuming. Doesn't always lead to good outcomes, by the way, but look, it's important information. And I guess that begs the question, is the same thing available today? How do you judge quality investment management of an ESG fund? Do labels exist?
The labels are coming in. It's incredibly difficult to accurately label, even something as simple as carbon footprint, and to say what is the impact of the portfolio that we're having just on carbon emissions, which is an area where there's actually relatively good data on most companies. It's not perfect, but relative to a lot of the other factors we might look at, that's one where there's been a lot of work done. But even with that relatively good data, how do you drive it down to such and such a company is it is doing a great job or a medium job or a poor job, and it is an area where there needs to be improvement. There's regulations coming in Europe around what constitutes a green product, and certainly there will be labelling requirements coming in actually later this year in Europe about what is considered to be, about how you're able to define a product, whether it's sustainable or not. And those labels, to be honest, are imperfect, but they're about as good as it's possible to be at the moment. In order to make them better, we need better disclosures from companies. And so that's another thing that is happening is the accounting standards boards are looking at, well, what can we ask companies to disclose, which then can be used to create better labeling for the products that are invested in those companies. And it as you can imagine, when you get down to the weeds of some of these questions about what needs to be disclosed, how much is it appropriate to disclose, because you don't want to bury companies under a deluge of too much irrelevant reporting. You want it to be relevant. Just a difficult area, but one where there's a lot of people looking very, very closely at it at the moment.
Bob, should a client, institutional client, or just a retail investor be wary of a firm that just has 1, 2, 3 products? Say they offer a suite of 12 to 15 products. Is there, and I don't say worry, maybe the worry is, should they have cause to go back and look at the finer details to make sure that the investment company isn't just doing this? Look, they're doing it to make money. That's the point of being in the asset management business. But they're applying the standards correctly, that they're not just saying, hey, I've got this ESG fund and it's no fossil fuels. But yet, over at the other 11, 12, 13 products, they're investing in fossil fuels. So is there concern there?
Yeah, there is. And here, it's almost like, when you're dealing with any corporation, it's, do you trust that corporation? Do you feel that this is somebody that you like doing business with? And that's always been a challenge with investment management firms. You want to deal with firms that you feel have high integrity and that will do the right thing. And sometimes it's not objectively verifiable that such and such a firm is a little bit sleazier than another firm, and your firms have their reputation, and reputation means something. It's not always accurate, but eventually I think the truth does out, and the firms that have the most integrity and that core will tend to shine through in the end. But definitely there's a lot of misinformation out there, and some firms have very good marketing departments that can dress things up to look much better than they really are. But this isn't a new problem. Again, marketing is a balance between. I think what we're really looking for in all of this is authenticity from investment managers, and a firm that's just going along for the ride or trying to look good, or just building a product that might have a couple of the right buzzwords attached to it, isn't necessarily going to come across as authentic. And what authenticity means is going to differ between the different types of firms. If you're a massive shop, then that gives you the capacity to do certain things that maybe a smaller shop wouldn't be able to do, but it also ties your hands in other ways. And so there's pros and cons to the different approaches that people can take.
Yeah, and by the way, doesn't just exist in ESG. This exists, Bob, in traditional asset classes. How many large cap value funds have you seen that kind of maybe slide down into the mid category to get some, because there are no more large caps to buy that are in the mind of the portfolio manager. Last question, Bob. What about diversity or ESG expertise on the staff, on the team? I mean, do you have to have a diverse staff with all, a PhD in biodiversity as an example? Can you apply ESG factors and not have an expert in fossil fuels, not have an expert in other social ills that ail our societies?
Yeah, this is a very interesting question that you raise there, actually, because what firms need is they're bringing together two types of expertise. That they do need expertise in the science and human rights knowledge and whatever the factor you're looking at. Again, there's a long and wide range. Biodiversity is incredibly important. And so you need a certain amount of knowledge on that, but what you're trying to do is bring that together with the investment process you already have. If you're doing something that's tagged on, we run into the problem we had earlier of something not really being authentic. You're trying to, it's not really embedded at the heart of the firm. So ideally what you're able to do is to build, you put it very well, a diverse team, not necessarily diverse in the sense of physical characteristics and so on, but diverse in the sense of you're bringing together different types of understandings and creating something which is marrying a strong investment process with a strong understanding of these elements, whether it's to do with climate science, whether it's to do with biodiversity, whether it's to do with human rights, or whatever area you're focused on, and nobody can focus on everything. The firm really is genuinely embedding that, but within their investment process, not as something that's kind of being wheeled in for a couple of meetings a month and then wheeled out again and sitting in a corner. It's got to be really embedded into the firm, and so that means that you do need a team that's combining all of those skills.
Yeah, well, look, there's a lot. This is kind of a newer, it's like Bitcoin, it's a newer asset class. People need to learn a lot more, and this is where people like yourself come in those meetings to make sure that people understand exactly what they're getting into and does it fit into their priorities. Bob, we're going to leave it there. As always, really appreciate you coming on the show and educating myself and all of us about where we stand with the latest ESG trends. Thanks so much for joining us, and we'll look forward to having you back on the program very soon.
Thanks, Jeff.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of our newsletter, The Morning Pulse, and of course our website. We're back again tomorrow, so until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.